Hello, I'm Jonathan Casey with Jade Mortgage, your honest mortgage expert. I'm here today to talk to you about the top 5 mistakes made when shopping for your home. The first mistake is not knowing where to start. I often have realtors come to me with clients who haven't been pre-approved yet for a mortgage. Let's talk about the pre-approval. The pre-approval is a very important process which shows you have been verified by a bank that you can handle a mortgage loan. It is critical to get this document if you are not a cash buyer. If you do not have this document ready, you cannot put in a serious offer on a home. It's very critical to get this pre-approval complete before you go out shopping. I have a lot of clients that go through the grind of seeing many open houses, finding their dream house, and they just can't get it. They started in the wrong place. The most important thing to do is get pre-approved with your loan first so you can have the most efficient time with your realtor. The next mistake people use is they don't have a plan. Having a plan in place will allow you to find your dream home faster. I would advise you to make a needs list. What do you need and what do you want? Building the needs list will help you find the home that you absolutely need to live in. If you're a family of 4, you may need 3 bedrooms. Do you want 5? I think we all do, but let's use 3 to start. And same thing with bathrooms. A family of 4 is going to be pretty tough with just 1, maybe not 3. Let's compromise at 2. Coming up with your property profile, that's having a plan. That will allow you to find your home faster. This way you're not wasting your time out there looking for a home you can't find, and it also helps your realtor as well as your loan officer. Our job is to help you find what you want. So if you're honest with us and you tell us what you're looking for, we're going to do our best to find it for you. The next mistake people make when going out for a home is lying on a mortgage application. I cannot even begin to tell you how bad of an idea this is. Lying on a mortgage application is a federal crime. Very often, it will result in jail time. You can have massive fees that you'll have to pay, and in almost every occasion, the home you purchased will be repossessed. It is so smart to just be honest. Just like when you were a kid, everyone heard honesty is the best policy. At Jade Mortgage, that's number 1 for us, being honest. So when you tell me that this home is going to be your primary property, make sure it is. If the down payment you're receiving from an individual is really your family member, make sure it is. We want to make sure that all the boxes are checked, not only for our sake, but for your sake. The whole idea of a mortgage is to make sure that you are safely borrowing money for your future. And if you're not honest, the only person you're putting in jeopardy is you, your future, and your family's future. So don't lie on your mortgage application. The next mistake that a lot of people make are not understanding the terms of their mortgage. It's very important when you get pre-approved from your loan officer, you want to make sure you understand the plan that was developed for you. Quite often, a mortgage loan officer will do their best to fill in the blanks. We don't always have all of the information. So our job is to figure out how to put it together and get you a loan. Now, why is this important? I sometimes find when I tell clients we have a down payment and we have a deposit, they mix the two up. I'm going to tell you the difference. When you purchase your home, you have to put a deposit down to hold it. That is very different from your down payment. In the past, loan officers have come to me and said, my client spent their deposit. They spent their down payment for their home because they thought their deposit was their down payment. This is a very common mistake. So if your loan officer tells you the deposit is $5,000, but your down payment is $50,000, don't spend that other $45,000. You're going to need it later. That is part of understanding the terms of the loan. It's very important to understand the terms of the loan because you may come into the mortgage process thinking you're going to get this very low interest rate, but you end up with a much higher one. Why does that happen? Rates fluctuate. So what you think you're going to get may be very different from what you actually get. It's important to talk to your loan officer and make sure you have realistic expectations of what you're going to get. All of this encompasses the terms of the loan. You should ask every single question because, again, this is your future, your family, your home. You need to protect it. We do our best for you, but ultimately you're the decision maker, so you need to know all of the terms of the loan. Now, the final mistake I find with my clients is they are too careful. I'm going to tell you what I mean by too careful. I'm located in San Diego, one of the hottest residential markets in the entire country. The house prices are climbing every day and inventory is strained every single month. Even in the summer, we're dying for more homes. There's never enough. Everyone wants to come here. Right now it's October and it's 65 degrees and sunny. For those of you who are in the snow, I feel your pain. I'm originally from the East Coast. I moved out of it a long time ago. But everyone has the same idea as me. They want to get down here too. It's a gorgeous area. And what they do is they find almost the perfect house, almost the perfect price, but it's not exactly right. Now, what ends up happening is they will pass on that house because they think they can do better. They think the house is $20,000 over value. In this economy, in this market, the top dog wins. The most competitive offer, the best pre-approvals, these are the people who are buying and winning. The only people not winning in this market are the ones standing on the sideline. It is good to be careful. It is your family, your future, your home. You want to protect it. But being too cautious can be a negative. I'm going to give you a very sad story, but this kind of thing happens all the time. A few months ago, I got my client approved for a $400,000 purchase. Now, around here in San Diego, $400,000 will buy you a beautiful condo. 2-bedroom, 2-bathroom. He was a single man, great place. We could get him in a great location. But he was too cautious. He looked around and said, this place isn't worth $400, it's only worth $350. Well, I'm going to tell you the cold, hard truth. There was about 15 other people that thought that house was worth $400,000, and it went like that. Well, now my client has been standing on the sideline for so many months. His $400,000 6 months ago can only afford houses worth $350 today. The market is going up every day, and the longer you wait to jump in, the less you're going to end up with. The days of buying a house for next to nothing and it's worth triple the next day, it's over. Those are the kind of things that hurt us in the past. Those are the kind of things that ruined our economy. Today we live in a stable economy. And what is very realistic is getting a house in a good neighborhood with a good value. That's where having a great real estate agent comes in. Your real estate agent will know the good neighborhoods. They're going to be able to print you out projections of future growth of that neighborhood. That's why I also recommend don't go out unrepresented. Your realtor's there for you. They have your best interests at heart, and so do we. The best thing to do is come to a professional so we can help you build a good loan that you understand and have a good realtor take you out there and find what you want. Now, if you like the content in this video and you want to find out more about our process and how we can help you be the most competitive shopper out there on the market, you can click the subscribe button to get future content. Now, if you have some questions, I know I just went over a lot of material, feel free to leave a comment below and I will get back to you. I want to answer all of your mortgage questions. I'll see you next time.